You're listening to Uranium Spotlight Podcast, sponsored by PurePoint Uranium Group. If you're following this market closely, you'll want to explore Behind the Curve, Understanding When and How the Uranium Market Turns, a new white paper that shows investors how to spot the cues that come before uranium prices move. And now, your host, Chris Frostad.
It's Tuesday, December 23rd, 2025, and this is a special edition of Uranium Spotlight. As we head into the final days of the year, this episode steps back from weekly price movements and short-term headlines to focus on what actually shaped the uranium market in 2025. This was a year where prices strengthened without excitement, where volatility faded, and where behavior mattered more than noise. The most important shifts did not arrive in a single dramatic event. They showed up slowly through changes in how producers behaved, how utilities bought fuel, and how investors began to differentiate between real opportunity and assumption. One of the most influential uranium stories of the year came out of Niger, and it reshaped how the market thinks about supply risk. For years, geopolitical concerns in uranium-producing regions were treated as background risk. They were discussed, modeled, and often discounted. In 2025, Niger crossed a line that changed that calculus. The country's military government moved beyond threats and into action. Orano lost control of its Somer mine, licenses were canceled, legal protections were ignored, and later in the year the government attempted to move roughly 2.3 million pounds of seized uranium to market despite international arbitration rulings that explicitly prohibited such a sale. This mattered because it turned abstract risk into physical uncertainty. Uranium supply is not interchangeable. Pounds that exist on paper are not always pounds that can be delivered under contract, insured, transported, and accepted by Western utilities. As Niger moved further out of the Western supply chain, buyers were forced to narrow their definition of acceptable supply. That did not just affect Niger. It raised questions about other politically fragile regions and reduced the number of jurisdictions utilities were comfortable relying on. The immediate effect was not a price spike. Instead, the market began to reprice reliability. Canadian and Australian supply gained strategic value. Utilities became less patient. Sellers became less flexible. For investors, the key point is that uranium prices can strengthen without dramatic demand growth when trust in supply erodes. 2025 showed how quickly perceived availability can shrink when geopolitics becomes physical. That shift is a good example of how uranium markets actually move. Prices did not react to a single headline. They adjusted as behavior changed and as risk became real. That's the type of market signal we focus on in our white paper, Behind the Curve, Understanding When and How the Uranium Market Turns. It shows how these changes tend to appear before they are widely recognized and how investors can identify them early. You can download it now at uraniumspotlight.com. The second major price driver this year did not come from governments or utilities. It came from producers, and it showed up in what they stopped doing. Throughout 2025, large producers increasingly emphasized one priority: meeting existing contractual obligations. Production was no longer positioned as flexible. Discretionary spot sales became rare. Output was matched to commitments, not market opportunity. This change mattered because producers have historically acted as shock absorbers. When prices softened, additional material often appeared. When prices rose, sellers helped keep markets orderly. That role faded this year. Week after week, spot volumes were modest, sometimes very modest, yet prices held firm. In several periods, prices moved higher without fund buying, without large utility tenders, and without obvious catalysts. The reason was simple. There were fewer willing sellers. When producers step back, the spot market becomes thin. Small purchases matter. The absence of selling becomes just as important as new demand. That dynamic explains why uranium prices rose quietly and steadily in 2025 rather than violently. For investors, this was a structural shift. It suggests that future price moves may require less demand than in past cycles because the supply side is no longer cushioning the market. The third story that mattered most this year was a clear change in how utilities approach procurement. Instead of focusing on near-term price weakness, utilities increasingly focused on duration and certainty. Contract tenors extended further into the future. Fuel cycle arrangements became more visible, and physical deliveries told a more important story than price negotiations. In the United Kingdom, fuel contracts tied to the Sizewell C project advanced, anchoring long-term planning for new nuclear capacity. In the United States, fuel deliveries supported the restart of the Palisades reactor, turning a previously retired asset back into a source of steady uranium consumption. In Japan, physical uranium shipments resumed for the first time since Fukushima. That shift was especially important because it marked the transition from policy discussion to fuel in hand. Reactors do not restart on sentiment, they restart on fuel. Together, these demands pulled future demand forward. When utilities secure long-term coverage early, optional supply disappears. That supports long-term prices even when spot activity pauses. For investors, this behavior signaled that uranium was no longer being treated as a cyclical trade. It was being treated as a strategic input with persistent scarcity risk. The equity market reflected these same themes, but with sharper differentiation. On the positive side, 2025 reinforced that genuine discovery still commands attention when it occurs in the right setting. NextGen's high-grade discoveries at Patterson Corridor East stood out as one of the most important exploration stories of the year, confirming scale, continuity, and proximity to existing permits and infrastructure. Alongside that, PurePoint Uranium delivered discovery success at Nova within its Dorado project. While different in style and scale, the Nova discovery reinforced a broader point. Meaningful uranium discoveries continue to occur in proven jurisdictions, near existing infrastructure, and within geological frameworks that majors understand. These discoveries were not treated as isolated drill results. They were viewed as confirmation that certain districts remain fertile and investable, which is why capital continues to concentrate rather than spread evenly across the sector. At the same time, consolidation accelerated. Premier American Uranium's acquisition of nuclear fuels reflected a move towards scale and credibility in the United States. China's domestic uranium IPO sent an even clearer signal, elevating uranium mining to national strategic importance and reinforcing long-term competition for supply. But 2025 also reminded investors that execution risk has not disappeared. Paladin's challenges at Langer Heinrich showed that restarts can underperform, guidance can be withdrawn, and single asset exposure carries real consequences even in strong markets. For investors, the message from equities was consistent with the physical market. Jurisdiction matters, execution matters, credibility matters, capital is available, but it is selective. Looking back, uranium prices strengthened in 2025 without drama because the market changed quietly. Supply became less flexible, demand became more committed, risk tolerance narrowed. These shifts tend to be recognized late, which is why understanding behavior matters more than chasing headlines. That framework is laid out in Behind the Curve, understanding when and how the uranium market turns. You can download it now at uraniumspotlight.com.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to the latest developments shaping the uranium fuel market and its role in the global energy landscape. Sponsored by PurePoint Uranium Group. While our passion for this sector is undeniable, remember that nothing discussed here should be taken as investment advice. Our goal is to provide a clear and balanced view of the factors influencing uranium prices. This is our last Uranium Spotlight for 2025. Join us again on Tuesday, January 6th, 2026. Until then, enjoy your holidays.